So our next presenter is Frédéric Mercier-Langevin, COO of Wesdome, a Canadian-focused gold producer operating two of the highest-grade gold mines in a Tier 1 jurisdiction, the Eagle River Mine in Ontario and the Kiena Mine here in Quebec. Fred.
Thank you. Okay. Good morning, everyone. Bonjour à tous. Very glad to be back here in Quebec City, where I guess more than 25 years ago I started my exciting career in mining with I studied in mining engineering at Laval University right here. It is a pleasure to be here this morning to present on behalf of Wesdome. As you'll see in the presentation, we have very exciting things to share about the future of Wesdome and our unique positioning in Canada, and more specifically in Quebec. Before I get started, I'll ask you to please review the safe harbor slide behind me, as I'll be making forward-looking statements during today's presentation. All done. Wesdome is a compelling yet simple investment story. We are a multi-asset producer with two high-grade underground mines. First of all, we have our Eagle River Mine located on the north shore of Lake Superior near Wawa in Ontario. That mine has been in operation since 1997. And we also have our recently restarted Kiena Mine in Val-d'Or in Quebec. Both mines are located in the mineral-rich Abitibi Gold Belt, host to many major gold and base metal deposits, many of which you've heard about today. Last year, our two mines produced about 123,000 ounces of gold. In 2024, we are targeting production of between 160 and 180,000 ounces. Importantly, there is significant opportunity to continue to grow organically. Each of our mines has both spare mill capacity and an attractive land package with exploration upside. The first quarter of this year marked a cash flow inflection point with free cash flow of $20 million. As the year progresses, we are looking to continue to generate strong free cash flow and strengthen our balance sheet as we continue to capture margins, especially at these gold prices. Now, a little bit about Wesdome. Wesdome has a market cap of $1.7 billion based on our current share price and 149 million shares outstanding. We have extensive and supportive capital market coverage and a high caliber list of institutional shareholders invested in the company. Our balance sheet continues to strengthen. As of the end of March, we had $48 million in cash and $29 million drawn on our revolving credit line. As we continue to pursue our vision of becoming a Canadian intermediate gold producer, our focus will be on delivering value for shareholders and maintaining a healthy balance sheet. Our two assets are located on the prolific gold belt that runs through Ontario and Quebec, which the Fraser Institute ranks as two of the world's most attractive jurisdictions for mine investments. We own two of the highest grade gold mines in Canada, with Eagle River taking top honors with head and shoulders above the rest, and also Kiena following at number 3. Our high grade supports strong risk-adjusted returns on invested capital. With cash flow expected to increase meaningfully in 2024, the plan is to pay down our revolver balance and fully fund our broad pipeline of organic high-return opportunities across both properties. Wesdome has a history of taking a disciplined approach to equity dilution and has always been focused on self-funding growth. This year, we plan to spend more than $30 million across both operations, which represents one of the largest self-funded exploration programs in Wesdome's history. Operational performance and creating value through the drill bit were instrumental in building our company and remain the cornerstones of Wesdome today as we double down on targeting opportunities near existing infrastructure and optimize both of our assets on a holistic basis. Wesdome has a track record of delivering on cash flow and production growth per share metrics, and based on our 2024 guidance, we expect this trend to continue. Wesdome has a key strategic advantage. We have meaningful excess capacity at our two mines. Given the extraordinary cost and complexity of building and commissioning a new mine, our existing infrastructure is a valuable asset that could deliver significant economies of scale if leveraged correctly. Eagle River, which currently operates at about half of its capacity, could achieve nameplate capacity with very, very little capital investment. Although the current mine plan supports a grade-driven production increase, we see opportunities to drive value and leverage the high fixed cost proportion of the mine by creating new mining horizons near surface to optimize the asset and leverage the spare installed capacity of the mill. At Kiena, we are operating at around 30% capacity right now, and we are currently developing the Presqu'île zone. Presqu'île is expected to account for an additional 250 to 400 tons per day of throughput without displacing any of our high-grade Kiena Deep material, as it will be hauled to surface via a ramp. Over time, we plan to increase our current throughput rate by unlocking other zones along existing infrastructure, and Presqu'île really is the first of many. Underpinning our ambitions to be an intermediate gold producer remains a steadfast focus on driving value through safe and responsible production, consistency, and reliability. Our 2023 results demonstrated the return to operational stability as we comfortably met guidance and set the stage for success in 2024. In 2023, we also completed the development of our ramp to level 129 at Kiena. During the first quarter of 2024, focus remained on lateral development along the level to allow for ore production from stopes, which commenced in mid-April. With this, we see a grade uptick with double digits grade from Q2 onwards as we start mining from the Kiena Deep A zone. Earlier this year, we issued a multi-year guidance for the first time, a testament to our confidence in our planning processes and our commitment to transparency. Compared to 2023, we're targeting a projection increase of approximately 30 to 40% in 2024 and up to 70% in 2025. Our 2024 and 2025 guidance is for higher production at lower costs year over year. Furthermore, the investments we make this year will support stronger returns and mitigate risks at both mines. For example, we're investing more in development to ensure that we have drilled out inventory to support strong planning and understanding of our high-grade ore bodies. In terms of growth capital, the main investment area at Kiena is the exploration ramp towards Presqu'île, which will unlock exploration opportunities from the underground across the southern corridor of the property. The ramp essentially pays for itself by giving us access to the initial resource area at Presqu'île, but also eventually to the 33-level production level. The 33-level production drift, we see we have an infrastructure that could move upwards of 1,000 tons per day of ore to surface and multiple targets that we can drill from this area. Additionally, this ramp to surface, which is going to be a second egress, will provide additional ventilation in the mine and debottleneck the hoist to some degree, offering productivity enhancement to the lower sections of the mine and enabling potentially more production from Kiena Deep. At Eagle, really we're trying to do some step-out drilling at depth to prove the continuation of the 300 zone that really is the backbone of our production right now. We also are investing in developing exploration platforms to test the extension at depth of other zones that we have been mining shallower. Our near-term strategic objectives will be on delivering on what we said and optimizing the value of Wesdome's precious metal assets. We're focused on going after the low-hanging fruit in the coming year, including pursuing a two-mine structure that we can do at the two sites, where we can leverage near-surface resources that are still available to us at the two sites and our spare mill capacity to be able to bring that into the mill. Also focusing on exploration and mine planning processes, and finally optimizing our supply chains to leverage the synergies between our two mines. Each of these initiatives is expected to accelerate free cash flow generation in the near term, which we will use to continue to strengthen our balance sheet and invest prudently. Exploration is in Wesdome's DNA, and we see it continue to be the most prudent and high return use of operating cash flow. This line highlights the robust pipeline from greenfield opportunities to near mine infrastructure that you see at the bottom there. Just to speak on a few, in February we put out results from a recently discovered Falcon 311 zone at Eagle River that includes a headline hit of 8 ounces per ton over a mineable width of over 2.3 meters. Indications are that the Falcon 311 is open in all directions, including up towards surface. This means it has the potential to provide additional mining horizons and generate strong returns by benefiting from existing mine infrastructure. It also proves the potential outside of the mine diorite that we started to prove a couple of years ago with the Falcon 11 zone. And with that new zone, it basically proves that there's stuff outside in the volcanics, outside of the historical mine diorite. At Kiena, we're also seeing early returns from this year's exploration program, including the expansion and definition of existing zones at Kiena Deep, and identification of potentially significant gold mineralization in the historically underexplored area, like the Wish area, that could be accessible from that 33-level infrastructure that we talked about earlier. Drilling at the Wish area has intersected narrow, high-grade gold mineralization from quartz veining in a favorable geologic setting known to host gold mineralization. Follow-up drilling is designed to focus on extrapolating this contact and related gold mineralization at depth and to provide an initial assessment of the size and potential continuity of this mineralization. Regardless of location, responsible mining is at the core of our operations and fundamental to the long-term success of our business. We are uniquely positioned due to the high-grade and selective nature of our mines, leading to some of the lowest carbon intensity in the space. We balance our mineral extraction with environmental care and social responsibility, with initiatives aimed at reinforcing our commitment to sustainability and community engagement, such as safe production, minimizing our carbon footprint, and promoting diversity within our workforce. With the Kiena restart, we have a strong presence in Quebec again, where we have a track record of investing in people in the community, whether it be through employment, procurement, and local donations. Notable is the fact that Wesdome's annual revenue represents the highest proportion of corporate revenue derived from our operating mine in Quebec, highlighting the importance and significance of Quebec for us going forward. So, in summary, Wesdome is a compelling story with an exciting future. We have two producing gold mines with long and rich histories in a Tier 1 jurisdiction, a long track record of finding ounces efficiently and high returns on the drill bit, low capital intensity with an underutilized asset structure, and a balance sheet which continues to get stronger and stronger. Capital-efficient organic growth is rare in the mining industry. Wesdome has the assets, the people, and the opportunity to build our business and deliver superior returns. So with that, I'll thank you for your time today, and also I'd like to thank the organizers for providing us with a platform to share some of the stuff that makes us excited about the future. Thank you.